Hey, welcome back to YT Finance, and today we are going over the latest news updates for SoFi Technologies SoFi stock. We're going to be talking about if this company is still a good buying opportunity despite it falling around 80% and what the future growth trajectory looks like for this particular stock. For more videos and news updates on SoFi Technologies, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. So if you didn't know, SoFi Technologies, ticker symbol SOFI, is a fintech company or a financial technology company that offers their consumers an all-in-one inclusive digital app that gives them access to various financial services and financial products. Essentially, SoFi acts as a digital bank, and their stock price currently trades for $5 per share. However, experts in this particular space believe the company should be trading somewhere between the range of $6 on the low end and $11 at the high end over the next 12 months. SoFi was mainly known as a student loan refinancing company when it originally became a business, but now they have diversified themselves into a plethora of various revenue streams, which would include lending products, checking accounts, savings accounts, credit cards, debit cards, different types of financing, on top of them offering their consumers an investing platform. SoFi stock, from its all-time highs, which were set back in 2020, has fallen around 80%, and although this particular company can be looked at as a company that could drop further in price, the future growth prospects of this company look phenomenal, particularly because this all-digital bank is absolutely turning the industry on its head. So let's take a look at SoFi Technologies, their fundamentals, and their growth prospects. If you're not aware, SoFi recently presented their third quarter earnings results, which were phenomenal, and I have a whole video dedicated to that, but let me just catch you up very quickly. Their third quarter was absolutely amazing, and this company seemed to have invigorated investors to tell them that this is a good buying opportunity if they plan to hold this company for the long term. Again, if you're not willing to hold this company for the long term, this may not be the company for you. The overall growth of SoFi Technologies has been off the chart lately, particularly in regards to the new members that they are adding to their platform, which allows them to give those members new products and thus increasing their overall revenues. Their new members increased by around 61% compared to that same quarter but a year earlier, and unlike their competition and other fintech companies, SoFi legitimately has and operates their own national bank because they acquired a bank charter back in January. On top of that, their total deposits grew by 86% year over year to $5 billion. Now, some of you have asked me the question of why do I own both SoFi Technologies, PayPal, Block, as well as Ally Financial? And if you notice that Ally Financial and SoFi Technologies are in direct competition with one another because Ally Financial operates as a digital bank, and clearly they have a huge market segment that Ally adheres to, on top of being extremely competitive and foundational in the digital banking space. So why would I own both SoFi Technologies and Ally Financial? Well, first off, these companies are clearly in competition with one another, but I take a co-opetition approach, and that means that I am willing to bet on more than one company in a particular space. And I tend to buy their direct competition. For instance, if I buy Lowe's, I also want to buy Home Depot. If I buy Walmart, I will also buy Target. If I buy Pepsi, I will also buy Coca-Cola. This not only diversifies my portfolio, but it also saves me because in my view, it doesn't matter which company wins, I'm going to make profits either way. Even if one of those businesses go out of business, I will still have the other to lean onto. So whichever one ends up winning and taking over the lion's share of that particular market, I'm still going to be sitting pretty on a boatload of profits, and the same thing goes here. SoFi Technologies is clearly a lot newer than Ally Financial, but Ally has been a staple in the digital banking space for many years now, and I also want to compare them very briefly in terms of their overall deposits. To give you an example, SoFi has around 2.1 million more depositors than Ally Financial, and that would make make SoFi Technologies, like we said earlier, have a total of around $5 billion worth of deposits. But if we look at Ally Financial, even though Ally Financial technically has less depositors, their total deposits recently reached $133.9 billion at the end of the third quarter. This is leagues above SoFi Technologies. Even though SoFi has more depositors, the depositors who go to Ally Financial are clearly extremely wealthy. But then this begs the question, why wouldn't I just continuously funnel money into Ally Financial and not invest into SoFi at all if I think they're so much better than SoFi? Well, the first off is that I don't think they're so much better than SoFi. I think both of these particular companies exceed in a different area. For instance, Ally Financial is extremely reliant on their heavy-handed and deep-pocket investors, and if they lost any of those investors or any of the very rich people who are using Ally Financial as their bank and they leave to go to another bank, that is going to be catastrophic for this company. Likewise, SoFi Technologies, even though they don't have mega deep pocket depositors, on average, their overall market that they adhere to are young high earners. These young high earners are making loads of money for their age, they have very high credit scores, and their likelihood of defaulting is extremely low. On top of that, I think that these young high earners will be able to build their growth as time goes on and make more and more money, thus solidifying and hopefully making SoFi Technologies a better overall company by increasing their overall deposits. So I think in the future, potentially, we could see a torch being passed from Ally Financial to SoFi Technologies as one of the dominant digital banks in the space. But regardless about which one is better or which one exceeds the other one, I am safe by investing into both of these particular companies. Also, Ally Financial has a lot of backing from people like Warren Buffett and a lot of other billionaires that tend to like this company. On the other hand, SoFi Technologies is more of a speculative investment that is a lot newer, but overall, I would say both of these companies are phenomenal, and I personally own both of these companies. So anyway, that is a quick spiel on my overall co-opetition approach of why I will buy companies that are in direct competition with that other company, because this is clearly not a zero-sum game in the stock market. Value is actually created through both of these companies, and regardless about which one is better, I want exposure to both. I also own Charles Schwab and JP Morgan and Bank of America and other types of banks that are in competition with one another. But likewise, I'm looking at this more from a industry or sector perspective, not necessarily a one business against another business, because regardless about which one's better, my portfolio is going to continuously grow with their overall profits. Now, SoFi Technologies does, in my opinion, have an edge over Ally Financial in some instances. For instance, SoFi owns a leading technology platform that they acquired a while back, and I'm not talking about their Technisys platform, which is very innovative. That platform will save them money. I'm referring to their Galileo platform, which has currently enabled 124 million accounts. And just in the last quarter, the Galileo-enabled accounts have risen by around 40% year over year as of the third quarter. And they have something that Ally Financial just can't really compete with. So I thought this acquisition of Galileo back in the day, and even right now, is paying off. On top of this, I'd also want to point out that SoFi Technologies has great positive cash flow, and the fact that this company is recently on the market and they are already generating positive cash flows, this is extremely encouraging. But I'm more intrigued with their overall revenue and their revenue growth. If you look at the screen, we can look at their adjusted net revenue and their adjusted EBITDA or their adjusted EBITDA from 2019 all the way to 2022. And look at how this company is growing their overall revenues. I mean, it's absolutely phenomenal. In 2019, they brought in $451 million worth of adjusted net revenue. And then in 2020, they brought in $621 million of adjusted net revenue, which grew the next year to $1.01 billion worth of net revenue on an adjusted basis in 2021. And then the guidance for 2022 is currently hovering between $1.517 billion and $1.522 billion. This company is rapidly expanding their overall adjusted net revenue, growing extremely quickly, much faster than the majority of their overall peers. Likewise, their adjusted EBITDA came in 2019 at a loss of $148 million. That loss loss then lowered in 2020 to only a loss of 45 million. In 2021, their adjusted EBITDA became positive of $30 million. And then for the year of 2022, the current prospects and forecasts, projections, and guidance is supposed to come in between $115 to $120 million on an adjusted basis, which is absolutely astounding. This growth is essentially the key ticket for the future stock price of this overall company, because as they continuously increase their adjusted net revenue and their adjusted EBITDA or EBITDA or earnings before interest, tax, depreciation, and amortization, this is going to have a very positive effect on their overall stock price. Now, I've mentioned this in previous videos that I don't think that SoFi stock or the SoFi stock price will actually recover fully until the overall economy recovers. And until the overall economy and the stock market bounces back, we won't see companies like SoFi bounce back until the overall economy has been fixed. Now, for long-term investors, this gives us a great opportunity to identify undervalued companies right now. And I actually did a video on the safest stocks set to surge that I am personally investing into. So if you want to go check out that video, go to my channel, click videos, and try to find that one, because those are very safe companies that are extremely undervalued right now. But SoFi isn't on that list, but why? Well, for two main reasons. One, SoFi is a small cap company, and I mainly went over blue chip large cap companies, and the second reason is SoFi is extremely risky. It's not a safe stock. It's currently trading at more than 40 times their adjusted EBITDA, which kind of seems outrageous to multiple investors, but if you're considering and you offset that with the growth rate of how quickly SoFi is growing its overall bottom line, this is clearly justifiable. This is why at the end of the article, this particular author says that this stock is a screaming buying opportunity if you're a long-term holder, but he also advocates that you should only invest a small portion of money into this stock and it should be a part of a well-diversified portfolio. And of course, I always talk about risk management in my videos because I personally have less than a 5% allocation to this company, so that would be a relatively small part of my portfolio, and it's also a part of a very well-diversified portfolio of large cap companies, small cap companies, aggressive growth companies, dividend cash flow yielding companies, and of course explosive hyper growth companies that I think have a great future. But the majority of the time I report on SoFi because that's what you all want to see from me. I also want to make you aware of their future growth prospects well into 2024 and 2025. According to current projections among professionals, the current revenue is forecasted for this company to increase on a PA basis by 23% from now over the next 3 years, so essentially until 2025. And this would mean that the company should become profitable during or at the end of 2024. And once the company becomes profitable at the end of 2024, we can really start to see the stock price start to gain momentum. So essentially, you have until right now, until 2024 or the end of 2024, to try to get the lowest cost basis for this company. And then after that date, that's when the company is most likely going to start appreciating aggressively in their stock price. I think SoFi Technologies will continuously impress investors with their quarter-over-quarter earnings results, as well as the overall revenues that they're bringing in. And investors should definitely look forward to the new year coming up because the student loan moratorium is ending, and this is going to thrust a lot of demand for various people refinancing their student loans into SoFi Technologies because that's one of the things that they're most known for. So I would encourage you to look deeper into this company. Always make sure to do your own research. Please do not overexpose yourself to this risky singular growth company. You should have a well-diversified portfolio in every single sector of the stock market. If you want to copy me and take a co-opetition approach to this, feel free to do that. But with that being said, go ahead and smash that like button for more news updates on SoFi Technologies. Subscribe if you are new, smash the like button, comment your thoughts down below, and I will see you in the next YT video.